Giovanni, good to speak to you. You're in isolation in Italy. I'm in isolation in Little Cayman. So tell people a little bit about yourself, and then we'll dig into what the hell's going on.
Myself, generally, not in isolation, you mean, I guess.
Not in isolation. You in the normal world.
The normal Giovanni, yeah. I run a family office here in Italy, so constantly on the financial markets. I'm home, family as well. My colleagues and I have been smart working since the 20th of February now. It's not so disruptive for our type of job, right? We're used to Bloomberg and all the information providers and the video conference calls, so not such a big deal. I cannot take your advice of running into the woods because I live in a city, although it's not a mega city. But we don't have close woods, but it's okay. Staying at home feels good, feels safe.
So talk me through how this unfolded in Italy and the kind of national psyche, and just talk us through that, because it's a story that we don't get to hear firsthand, and you've been living it firsthand. So when you first saw it in China, what did you think?
I think it's pretty natural for the human being. When we first heard from China, we were quite relaxed. You don't think this is going to come to you, right? And it did come. Where are we now in Italy? Just to update the numbers, roughly 15,000 official recognized cases, about 1,000 deaths, about 1,300 healed. And the exponential growth continues, both in terms of new cases, of critical cases, of deaths, and of healings, luckily. We haven't really had a chance to learn from the Chinese experience. You might have seen the picture, the chart has been going around that shows how the curves of the Hubei province in China and of Italy overlap precisely with I think it's a 38 days delay. And by the way, Hubei and Italy have about the same population, 55 million Hubei, 60 million Italy. Now, there's another chart going around these days that shows the same overlap, the beginning of the same overlap between Italy and the rest of Europe, which is kind of 10 days behind. So I was saying we didn't have a chance to really learn from the Chinese experience. It was certainly a mistake on us as people and on the governments, but it wasn't easy because despite the strong trade and business relationship between China and Italy, there's a distance, both geographically and culturally. So, and we were the first ones in the Western world, so it wasn't that easy. Now, I'm only today hearing France, Germany, the rest of Europe taking serious action. The last few days from here, the sentiment was, why are these guys waiting? They're just repeating our mistakes, but this mistake is not acceptable, in my opinion. So I'm glad that they are moving, and I urge, if I could speak to them, I would urge them to move again. There's a great chart by a guy called Thomas Puey on Medium that shows how much impact one day of delay in implementing what they call social distancing policies or measures can make in the number of cases. And it's amazing. So that alone should convince everybody to take a more prudent approach.
So what is the situation? What is the situation now in Italy in terms of what's shut down, what businesses are open? I mean, what's going on economically and socially now?
So the only open businesses are for commercial activity on the streets are pharmacies and food. All the rest is closed. But offices and companies can be open and operate as far as they respect policies and implement policies that allow people to stay distant one from the other. And it's pretty personal. Every manager had to choose their own way to implement this. So it's not a total business shutdown.
And what about
before going into?
Oh.
Yeah, sorry. Go ahead.
What about factories? I mean, the industrial heartland of Europe is North Italy, right? How does that affect the industrial output of the country?
It will be affected, but factories are not shut down. They're continuing to run.
Wow.
Of course, they've slowed down because if you need to have, for example, the simple thing is half of the workforce home and half at the office or at the factory and in and out, alternating 50-50. So that clearly reduces your workforce. But on the other hand, consumption is clearly reduced much more than that. So it should stay quite in balance. I mean, the economical impact is certainly there. Well, let me, before going into the economical impact, a few words on one thing. It doesn't matter how late you come to it, but this thing really gets into people's minds. So it's a priority to be calm, to take care of yourselves, to eat well, and to be strong. It's the first time in a way that our generation is faced with such a chance to prove our resilience. I don't want to compare it with the war. We're under a roof. We're healthy. We're warm. We've got food. We've got internet. We've even got applications that allow us to do video call socially. A couple of days ago, we celebrated my daddy's birthday, 85, with a video call app. So come on, this is not a war. We're not being bombed the buildings and the houses. But in our generation, which is probably weaker than that of our grandparents and great-grandparents, it's the first time of such a proof. So it's important to understand this and stay very strong. The other thing, it's clear that the healthcare system is heavily stressed. There is a picture that became very famous in Italy of Francesca, this nurse, falling asleep on her desk after, 10, 12 hours uninterrupted work. And around Francesca and the nurses and the doctors, there's an amazing number of people doing an excellent job, and the resources are pretty stretched. This morning, the first call I had was with my friend Diego, who runs the logistics for a big hospital in Bologna. He takes 45 minutes to work, typically, but because they've suspended most of the high-speed trains to avoid people going around and gathering together, and because of the extended hours they need to work, it takes him now, he's left with very few hours of sleep and of rest. So, and his first task this morning was to find a forklift to move one of those huge emergency tents to accommodate more beds. My second call this morning was with another friend, Paolo, that runs a hospitality business. He was calling all the landlords he manages the short-term rent of the apartments for, to convince them to give out for free the apartments to the doctors and the people working in the hospitals that, like Diego, cannot commute every day because it's too far. Otherwise, they sleep 1 hour instead of 3. One evidence I had, the doctors were the first ones 2, 3, 4 weeks ago to take this thing seriously, while everybody else was pretty relaxed. It's exposed. It's quite clear that they know how to do the job. And a positive signal, if you want, these days, yesterday for the first time I heard a doctor publicly, the general manager of a big hospital here in Lombardia, saying, we have the resources. They've come. We've been provided with what we need. So you guys just do your job, stay home, and we'll fix this. Your question was on the economy.
No, it's all right. Let's go back a little bit to this. So the healthcare system overloading, and we're hearing stories in Italy that in some places it's very basically a choice of who lives and who dies when you're under a stretched resources situation. What kind of stories are you hearing on this stretch of resources that's going on? Because this is a lot of things that people don't understand. They say the death rate's not that high. Well, actually, in Italy, it's been quite high because of the aging population, and also not everything's being measured. But it's the impact on the medical system that people don't really understand. So any more light you've got on that would be really enlightening for people.
It was different. It was very difficult, and it is very difficult to understand what is the reality to reply this question. We went through those days when on WhatsApp there was a number of recordings going around from people working within the hospitals and telling people, alarming people, and telling them, look, the beds are over, the ventilation systems are over. From tomorrow, we need to choose who we want to save. The next days, the messages that arrived were calming. And in the last couple of days, the official messages, which I believe were, don't worry, now the resources are available, so it's not anymore a choice of who we're going to save and we will have to let go. So it's a mix. I think for the first few days, the system was a little unprepared. So it was probably true that at some point, some doctor somewhere in Lombardia had to take a decision. In general, I'm sure things now, after a few days, have improved a lot.
And so what is it like for you and your parents, the kind of, the having to go through the panic and the kind of disbelief and then the despair? Talk us through that kind of personal journey, because again, for your parents, or even you thinking about your parents, it's very unsettling, and your friends must be going through the same thing. Talk a bit about that.
It's very personal. We are managing to be calm. We're safe. We're pretty strong. So far, I didn't have any 0 degree of separation cases close to me. That may be also the reason why we managed to stay calm. We took it seriously from the beginning. We were lucky or smart enough to do that. But of course, you're worried. No, I think in general, the population is giving a proof of a lot of stability, is very united. We're experiencing for the first time an upside-down Italy. Well, as you said, Lombardia is by far the most productive region and industrialized region in Italy and maybe in Europe. And it was interesting to see the southern people staring at the north and interviewed on TV and saying, we would like to help, but we don't know what to do. Nobody knows what to do. You can just stay home and learn from the learning curve and use the learning curve to learn from the other people's experience.
Yeah, I mean, I really sincerely hope, looking what's going on in Spain and France and Germany, I mean, Spain was slow again, and they've just hit over 4,000 cases this morning at midday. They'll probably get to maybe 5,000 by the end of the day. I mean, it's exploding in Spain. They've allowed too much travel. Your plea at the beginning of our conversation for people to hurry up and understand what's going on doesn't yet seem to be being taken on board. They're slowly making steps, but just haven't gone big and gone early, which seems to be the only answer here, like South Korea did.
Yeah, that's exactly correct. That's exactly the feeling we have, and we feel, as the south towards the north, we feel we should do more to tell people. I've shared a lot of messages on this topic with my friends around Europe and the US, and we should all do the same. Just be calm, but take it seriously. It will help slowing it down.
And, the two economies that stand out to me that are potentially being irresponsible is the UK and the US, that have been extremely slow in doing things. Yes, the UK's made noises, but they've also said, well, we just kind of want to see if it can burn itself out. But I think the human behavior aspect means that it can't. And the US seems to have made a huge policy error. What's your thoughts from being in Italy and looking at the US and how they're dealing with it?
It's similar to my thought on how France, Spain, Germany were dealing with it. Too slowly. Hopefully that will not prove to be a mistake. in the U.S. specifically, you mentioned demography before. The U.S. are a much younger country, so that probably will help to have a lower mortality rate, which is important. But that's not enough reason to be more relaxed.
No, because it's not about the mortality rate. You know, they've had the virus for 48 days now in the US without really taking major actions. And that's the longest lag I've seen of any of the countries. And we saw the exponential curve that Italy went through. And you just got to think, you know, the US and Italy are overlapping in their exponential curves. And it looks like, you know, the US has got a hell of a problem ahead of it.
Yeah, it's certainly so. Talking about our government, it was highly criticized in the first few days of the emergency. And I'm sure they made some mistakes, but I wouldn't want to be in their shoes in that moment to treat such an emergency. It's like when we're all trainers of the national football team. I think it's a little stupid to criticize without understanding how tough job that is. Plus, honestly, I believe I'm not particularly a fan or an opponent of our Prime Minister Giuseppe Conte, but I think the body language and communication style was pretty good, surprisingly good. He speaks very clearly, very simply, not too formally, with a language that gets very easily to all the groups of population in terms of social, age, education. And even a few days ago, our finance minister, Gualtieri, said no one is going to lose a job because of the coronavirus. That's an incredibly strong statement. I'm not sure I would have made that statement, and I'm not even sure I believe that statement. But who knows, that might be the right statement to make when your priority is to keep the population calm, safe, and healthy, even if it's a small lie. So it's very difficult to criticize. We shouldn't do it. It's just they're doing a good job over here. And on the economical side, Raoul, of course, talking about Italy means talking about Europe and talking about the world. But there's a lot of talking about Europe itself, right? So Europe is less prepared to deal with supporting the economy because it has less ammunition on the monetary policy side and on the fiscal policy side. Fiscal policy side because of the cultural clash historically between the German-led austerity and the Italian-led approach or Latin-style approach to the rules, if you want. Now, there's a few points I would like to make here. First, organically, let's not forget that the welfare system in Europe is better suited for these crises. We've already seen this in the past, in the global financial crisis. Now, this is, of course, the flip side of the coin of then having a continent that grows more slowly. But in this moment in time, it's the downside that matters more. So take, for example, the social tools available as safety nets. In Italy, we have the Cassa Integrazione, which is like a wage guarantee fund managed by the INPS, the National Institute of Social Insurance, that pays 80% of the salary for about a year. It kicks in very, very quickly, and it did kick in very, very quickly for small companies these days. And that helps a lot in avoiding layoffs, moving the costs from the private to the public. Again, that might come at a slower growth in the future, but who cares today? So that's one thing that people should not forget when comparing Europe to the other continents.
You're trading social benefit for growth, which some people don't understand, but Europeans took that, and in many respects, it helps cushion the worst outcomes, as you say. It kind of gives you a bit of downside protection for the average person, but it gives upside issues for sovereign debt.
Correct. Now, back to the monetary and fiscal policies. So monetary policy, for sure, the rates are well below zero. We know that, so there's not much room to decrease those. But does it really matter? Is lower interest rates what matter in this moment in time? If a small company is cash flow negative, they need money. They would pay 10% rate. They don't care whether the rates are at 0 or 1 or 2 or 3. So I don't think that matters much. And that's something that we could expand on talking about the Federal Reserve move. But it doesn't do any harm, but that's not the pure solution. On monetary policy, we know there's many unconventional tools that by now are conventional. And the ECB started using some of those yesterday, despite the communication error of Mrs. Lagarde. Some of those tools are already active. Banks are being helped, and banks are giving out credit more quickly to the small companies. They're calling the companies, telling them, we have the tools to help you a little bit, to improve your overdraft limit, and so on. This is happening. Talking to people on the ground, we have evidence of this happening. Now, on the fiscal policy side, it's a more cultural question. I think that before the coronavirus started, we were already in a very different situation. So we've all heard the political pressure on Germany, also from internally, from the bottom up, call it Black Zero, call it Green New Deal. So we have to admit we are in a different situation. I don't think Europe will let Italy go. We have had already a couple of evidences these days. Mrs. Merkel, a couple of days ago, the sweet repeat of Draghi's July 2012, with do whatever it takes. That applied to monetary policy, of course, because he was at the helm of the ECB. She's in politics, so that applies to fiscal policy. Hopefully it won't apply just to the media. And then Mrs. von der Leyen of the European Commission, that in a perfect Italian, I wonder whether she speaks Italian or whether she was reading, but it did work perfectly, gave a message saying, siamo tutti italiani, we are all Italians. That wasn't a fake message. This is an exogenous, makes everybody feel bad. And as opposed to other situations in the past, there's not anybody in particular to be blamed. There wasn't any financial inconsistency or bad governance causing this. It's a more complex conversation. Maybe you have seen the video, the TED Talk of Bill Gates from 2015 at Ebola time. So that's impressive. That's what we should be talking about, not Italy and Europe. So that's clearly a shared global response.
Yes, but I guess the issue, I mean, the next phase seems to be, and we all kind of knew this when Lagarde came in, is the next step for monetary policy in Europe is tying together fiscal and monetary, somehow combining the nations, getting rid of the kind of fiscal the deficit ceilings, and allowing some ability to move. What is your impression that the Europeans are going to do? Because they're going to have to do something really big at some point, because it's not just Italy, right? You know, as you say, I mean, this is the whole of Europe that is in the same boat, just at a different phase. So they're going to have to do something extraordinary to not lose the banking sector and to not lose all the small businesses and that kind of thing. What is your impression that they're going to do with the fiscal monetary combination?
That's a tough question to answer. I think they will go very gradually and very wisely. Maybe that will mean the markets in the short term will be disappointed as they were yesterday, but I don't see the style changing. Having said this, I think the help and the support that is needed will come. So the budget deficit limits will be relaxed. Of course, it will be temporary, or the declarations will be, it must be temporary, and rightly so, because this probably will have a temporary impact, not a permanent impact, or hopefully so. But they will come. So I'm pretty confident that they will do the right moves, and luckily I'm not there to take the decision for them.
No, one of the other things I'm interested in is China had its shutdown, which Italy's going through now. So then they start bringing production back to life and a bit of consumption. Look, nobody trusts each other. The social distancing, there's a lot of scarring that comes out of something that's so fast. But the issue now is China's trading partners are all back to go through the same. There's like a rolling shutdown. So let's say Italy now has taken the more extreme measures, and within, call it 60 days, the rate of growth has now fallen significantly, like Korea, and they've got it under control. But at that stage, the Spain or the UK or the US is going through peak. My issue is, does this drag on a lot longer just because of the how this is spreading and how slow people are reacting? And does that create more problems than the initial shutdown?
Well, it certainly will. The more it's a global system, interconnected, and we can't really split it in parts. It's not that China is all good and safe now, and Italy will be good and safe in 38 days, and then after 10 days, the UK. Of course, it's all very fluid on the positive and negative side. I would take it from another angle. So if I look at the economy and the markets in general now, what would I want to know of the future to understand where they are headed? I would want to know how and when and where the second wave of infection develops, because the first one, we've kind of understood it. So science and statistics seem to agree that the base case is that this pandemic, at some point over the years, will infect 50% of the population, maybe. People say between 30 and 70, with a slowly decreasing...
Which we need, because we need to have herd immunity. People need to get affected, but slowly.
Correct, exactly. So decreasing severity and decreasing stress on the health system, of course. So if this is the case, it probably means that, as you said, let's say 60 days from now, most of the developed world sees a flattening curve in new cases, in deaths, and decreasing. And let's say the problem is solved or uncertainty is gone. In this scenario, the Olympic Games in Tokyo are happily held, which I strongly hope is not being superficial. That's August, that's not April. And then next winter in the Northern Hemisphere, we get back to the second wave. By then, maybe some vaccine is available. We don't know that yet. We know it takes long, but we'll see. So that's the base case. In that base case, in my opinion, it will be hard to see a V-shaped recovery, as they say, both in economy and in markets, because some impact on both the consumer confidence and investor confidence will remain. So in a way, whichever the bottom level, the markets and the risky assets will have reached by then, will have time to put money to work, and as well will have time to get back to normal life. This will be different between the various areas. You have the old continent, Europe, behaving one way, and then probably you have China that was already running ahead as a herd of buffaloes before, and they will continue to do so. And it has the domestic consumption power to have a V recovery, which, by the way, it wouldn't be a V because the markets there didn't come off that much. So it's clearly a different story. Now, this is the base case. The other two scenarios are worst and best. Worst scenario, which I think not enough people are talking about, or hopefully, or maybe it's better that not enough people talk about it, is that the second wave of infection comes long before, like now in China. That would be a killer. That would have everybody throwing the towel. It will kill the investor and consumer confidence, and we would really be left with no marginal buyer in the market.
And that was similar to the Spanish flu, because it actually came back in July and August in France and a few other countries, earlier than anybody would imagine. And that was the damaging one, because everyone had stopped social distancing, everyone had kind of relaxed, and then before you know it, it really takes off again. So it's a hugely dangerous outcome, that one.
Exactly. Of course, we strongly hope that times are different from the times of the Spanish flu, and they are, and that this doesn't happen. But let's keep this in a corner of our mind. And if we are investors in the markets, let's be ready to act if we want to reduce risk in case it happens, as we did or we should have done, depending when there was the first outburst of the first wave. Then luckily, there's also a third scenario, which is the best case, justified by the temperature. So there was a study out, and there's a great map from, I believe, the University of Maryland, although I'm not entirely sure, that shows that all the regions affected strongly from Japan, Korea, Hubei, Iran, Italy, up to California, are in the same yellow zone, which means they share the same ratio between temperature and humidity. So it looks like it makes sense to think that the virus can die when it's warm. So there is also a possibility, however small, that the virus dies forever in the summer, in the northern hemisphere summer. So let's try to keep always a positive note on the table, and we also have this scenario.
Yeah, and I think the key here is we will not know until later in the summer. So, we may get to the point of pausing as the curves all start to slow down. And I think we need to go through the panic in the US and probably in the UK first, that France and Germany and everybody's going through almost today. And then we'll see the curves flatten out, and then we have to wait, and we won't know.
Yeah, which is one of the reasons why I don't expect such a sharp V recovery as in other cases. I'm not negative on, I'm a buyer on dips in general. I think the underlying bull trend for the economy in general is still there. The reasons why it could extend some more time is still there, as well as the problems that were hidden behind that are still there. But that doesn't mean that it accelerates immediately. And one of the reasons is what you and I just said. It will take some time for all of us to feel so safe and so strong from every perspective, including that of investing money in risky assets.
And you mentioned before about the Federal Reserve. What do you think America's going to do at this point? Because it's at the interesting juncture where it's about to run out of ammunition. What's your viewpoint on that?
Well, I think one of the keys will be, I know it might sound impossible, but for Mr. Trump and the other representatives of the government to sound wise and talk as our prime minister did, clearly to all the people and firmly. So it sounds like a different style from the one he has had up until now. We'll see what happens. But that's on the psychology of the people will matter. In terms of the economy, well, we all expect from the U.S. just a big number. However, it will come. Yeah, from Europe, you always say as a joke that in the U.S. everything is bigger. A supermarket is bigger. They have a mall. We had the small supermarkets. So now let's see if they bring a ton of money on the table, and that will be the key. Temperature, which is a lot more varied in the U.S. than in Europe, might help. The younger people, the younger demography might help. So all in all, we could have a better situation than in Europe.
Yeah. And so I guess the next phase is waiting. We've seen this before in crisis in the past. They kind of test ideas. The market usually rejects them all. And then they come out with the bazooka because it's the only way to stop it. So it kind of, I guess we'll go through that process of testing a few ideas. It's not enough for the market. I mean, even whatever the Fed said, $1.5 trillion of repo didn't really stop anything yesterday.
Yeah. Well, my impression is that the investors are not overloaded with positions on risky assets at the moment. I think a lot was already offloaded. We've seen record flows into cash, into government bonds in the last few weeks. So that should support the market at some point, because we know positioning is quite key.
And you and I were chatting on email about China and the RMB, because that's one of the things is, how does the dollar play out into all of this? There's an argument, and it's not clear. There's an argument that the euro could weaken as Europe itself has to take the fiscal strain, and there's a whole load of things that they need to do to try and stabilize their economy. But in China, they had a situation where the economy was shut down, so there's no outflows and no inflows, and that's okay because it's stable. As things change, what's your view there? Is the RMB at risk, or are you the other way around with this?
I'm the other way around. In the short term, I can guarantee that they will be able to keep it so stable if there's another route on the risky assets. But in general, I think this is already an evidence of the resilience that China has compared to the past. It's not an emerging market anymore, let's face it. The portfolios are not enough diversified into Chinese assets, whether they're bonds or equities. They are experiencing inflows from the rebalancing of the global indices, which are supporting those markets, and that's a lack that European and US markets don't have at the moment, and that will go on for some time. So there's a number of reasons why I'm in the camp of thinking that the renminbi will not devalue aggressively.
And what about the dollar overall? How do you see the setup there? Or you think it's a mixed bag? Is it stronger against emerging markets and weaker against majors? What's your view? Because it's a very mixed view for everybody right now.
It's true, and I don't take either side because I think it's pretty uncertain. As far as emerging markets in general are concerned, I think in part they would benefit from the Chinese effect that I just talked about, if that materializes. So the diversification effect of the portfolios into different currencies and country risks would be true, yes, for gold, for the renminbi, but maybe for many other countries which now seem to be much more damaged, be it Brazil with its real, be it Mexico with its peso, or Norway with its krona, developed or developing. One of the consequences of the world being more globalized means this, in my opinion, reducing the importance of the dollar, which should help to keep the dollar more balanced and avoid the very real dangers of funding stress that you very frequently talk about, which are certainly there. The new world, the more globalized investor world, might help in avoiding that stress.
Interesting. And what about what's your view on gold? Gold has been everybody's favorite for a while. What do you think?
I'm not a big fan of gold in general as an asset. I like to buy assets which have a value and generate a value for some reason. So I see it only as a store of value and diversification from the rest of the portfolio. Be it a currency, be it an asset, it doesn't really matter. It's gone up a lot. I don't see gold going to 10,000 as someone says, but I think it makes sense to hold some in a portfolio because it certainly keeps its diversification.
So as a portfolio diversifier for you, it has value, but as a single asset bet, which I know a lot of people have got. I see it on Twitter, I see it elsewhere. You think that's not probably the best use of capital?
Not the best use of capital, exactly. Which I don't think will go down now in the short term much. I think it will stay here because uncertainty will stay here. And as we know, gold turns out to be a good hedge on hyperinflation and on deflation. So it's not a bad idea to keep some. But yes, as a real asset, not so keen to keeping it forever.
So what is the next phase in markets for you? Do you think we've got some more downside before stabilizing, into this kind of period of time where we don't really know anything? What's your hunch here? I mean, it's not easy to call because obviously we've moved very sharply. What do you think?
Yeah, Well, my base case is that we won't see a new low on the S&P, which is the first thing we'll look at, below the low of the last quarter of 18, which was 2,300 something.
So you think that support holds, essentially?
I think that might hold. I would prepare my portfolio for this not to hold. So I would prepare I think it's the time of reducing the sizing of the positions and of the bets, reduce the value at risk on the table, because the moves are big enough to make money also with smaller positions, and they're big enough to ruin everybody with large positions.
Exactly.
So I think the more you put yourself in a position of not having to be right to necessarily being right, it's better. And so that's my base case. It depends how it will evolve in the UK and the US.
Yeah.
Because those are the key markets for the financial markets. So if it takes a bad angle, as it did clearly in Italy, for the UK and for the US especially, I don't think that support will hold.
No, yeah, I tend to agree. So just wrapping up, how long do you think you're all going to be sort of semi-quarantined or self-quarantined, the social distancing? How long does this go on for now for you? Because it's fine, you've been at home for a few weeks now, but you know, your beard's getting longer, you know, you don't get to see people. How does that go on?
Well, I think it will extend at least until my birthday, which is the 9th of April, and then there's Easter. So I expect my friends to set up some video conference also for that, like the one we're going to have tonight for another friend. Yeah, I know. But apart from this, it makes sense to look at the Hubei example. They're getting out of their quarantine now, and we're 30 days behind.
Right. Okay. So that's
the only data point we really have, and we can take as an example and as a guide.
Now, just a last question that I wanted to ask on this is, what is it like going shopping? So you go and buy groceries. Are people not fearful? Does any cough, is everyone keeping away from everybody? You know, because the human behavioral thing, you know, is obviously humans over extrapolate everything. So what's it like when you just go out and do a normal chore?
In the first few days, there was a run on the supermarkets, and people just emptied everything and bought everything they could, imagining the war coming. Now it's got a lot better. People are getting used to it. Of course, you're allowed to go out and move around your place. And certainly for shopping, for food and medicines. When you get to a small food store, you wait outside. Really? And you just wait for one person to get in and out at a time. It's not so difficult. It's not freezing cold. We're not at -20 here, and we're not at +40. So it's fine. It's weird. Let me tell you, it's very weird.
Yeah, it's not Russia in the 1980s, but it feels like it's like rationing almost. But
it does feel as rationing, but it's not. I mean, there's food available, whatever you need, in whatever quantity you need.
Amazing. I mean, who'd have thought this, Giovanni, right? I mean, we all knew that the pandemic was one of the black swans, right? We all talked about it. But to live it, the really bizarre thing.
It's true. Although at the beginning of the year for the Outlook 2020, I wrote on a note for my colleagues, don't forget that a natural disaster, which is a pandemic, is a natural disaster in a way, is always the biggest reason for a market shock. But that's not because I was waiting for it. I do it every year. And it's wise to do it. No, nobody was thinking about it. Maybe Bill Gates was, and he's an outstanding brain, of course. and someone else. I was really impressed by the doctors and how early they saw this coming. So let's listen to them. Let's trust them when they talk. It's their job.
Yeah, it's a good proof of science over hubris. I mean, the science is what you need to follow here, and not the message from random people on Facebook.
True.
It's a really interesting thing, and I think the behavioralists are also important in this, because it is human behavior, after all, that will actually drive both the spread of the virus and the economic impact.
The psychological impact, yes, and behavioral, as you say, is very important as well. I'm a natural optimist, and I want to be an optimist also in this case. Despite the damage and the lives that have been lost, it will be a wasted opportunity if we as people and as a population don't grow better out of this. In terms of focusing on what's more important and taking care of ourselves, and again, doing the right things and understanding that some things are really a plus.
Giovanni, that's a perfect note to end it on. Listen, thank you so much for your time. And it's super interesting to hear, because you're kind of ahead of the curve for the rest of us. And I think, your messaging about people understanding what it is, I think it's really important. So thank you for that. And thank you for everything. And don't get too bored in isolation. Have a few video conference calls with glasses of wine. You'll be fine.
I certainly do that. Thank you, Raoul.
Okay, my friend.
Bye-bye.
Cheers.
If you're ready to go beyond the interview, make sure you visit realvision.com, where you can try Real Vision Plus for 30 days for just $1. We'll see you next time right here on Real Vision.